The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, boys and girls. Well, we're going to have a little announcement today. Tomorrow, we're going to have a special guest at the half hour. Victoria Martin, who is my personal astrologer, is going to be on the program with us. She's been on Oprah quite a few times and a lot of other shows and stuff. But I met her 30 some years ago when I was back in Chicago. Trading off the floor of the exchange, and first got involved with astrology with Dr. Ruth Miller. The little hospital that I was born in Clinton, Indiana, burned down in 1944, so they didn't have any birth records, and so everything had to be reconstructed from the files of the physicians. They only had 2 physicians in the whole county, so they knew that I was born on July 28th, and they knew that I was born at night. That was about as close as they could get. My aunt told me my mother had passed away very, very early, so I don't remember asking her this, but my aunt told me that it was born down. I was born before 44, but it burned down in 44. So yeah, I could be president, I guess, with no record. Anyway, I had to find out, when I was born, and so they said that they could rectify the chart. I don't know what that means, but Victoria will talk to us about this tomorrow. But basically, they go back and find out certain things in your history, and she came up with the time of 11:50 p.m. on July 28th, and so. Sam Crawford, my good friend, Arch Crawford, he said, well, you ought to have it done by somebody else. And so I had it done by another astrologer who we've had on the program here. That was Bill Meridian out of Austria, out of Vienna, Austria. And Bill came up with the time of 11:50. And so that was pretty much spot on with what everybody thought. So that's pretty much what happened anyway. That's what they said my birth time was, 11:50. The fact that 2 different people came up with the things, you'll be able to see it. We'll have to wait and see. Those of you that get my emails, I'm having a real serious problem with hacking, and so I'm not able to send out emails. I'm going to have to get it fixed, but we'll be able to be able to see when that actually happens. Okay, we have another guest. This one you don't want to miss, boys and girls. This is going to be on Monday. I'm going to have a very, very special guest on. As you know, I've been doing this business for a very, very long time, and there's only 2 or 3 people that I really listen to when they have something to say. I have probably 4 people. One of them is in the room here, Mr. Z. I always listen to what he has to say. But on the technical side of it, there's a couple of people. There's a gentleman out of London that I listen to. Happens to be a very good friend who does some incredible work. But there's also a gentleman out of Nashville, Tennessee. His name is William Ehrman, E-R-M-A-N. He's in charge of Ehrmanometry. You can go in and Google it if you like. And he's got a website and stuff. But he's going to be on our show on Monday at 12:30. He is the gentleman who probably has the best timing system personally that I have ever seen. It's all based on geometry and mathematics, has nothing to do with astrology or anything like that. But he is really, really spectacular. He's actually, 10 years older than me, so he's got a lot of experience. He's going to share with us, some of the things that he looks at and does. And he's got a book, excuse me, that's coming out that you definitely should have. I think it will be, something really amazing. I've not seen any other type of work like this in all the years I've been watching this. I've seen remnants of it, but nothing put together like what Bill Ehrman does. Okay, let's, now he'll be on the Monday show. So we have a couple of interesting guests coming on. And and also next week we'll have Janet Yellen on, but she hasn't got back to me yet on that. So I'll let you know if Janet gets back to me on being on the show. I put an email into her at the Federal Reserve, but so far it's been a little slow coming. I put it in the day she was elected, but she hasn't got back to me as of yet. Okay, the first chart that I posted into Tiger TV today was the DAX index. This is the German stock market. And as you can see, it's been going absolutely straight up these last couple of days. Makes no difference what the U.S. market does. The German market continues to go higher. I think this is an indication that each of these markets should be looked at separately without any question. We're over a very, very critical low here in the market if this is to hold. If we close badly today, folks, we are setting up for something really, 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 really serious to the downside. That means if we close below 25 in the futures, S&P futures, that's going to be something that's we're going to be looking at something really far, far down. It's going to probably happen very, very quickly. I'm not going to use the C word, but you know, who knows? We'll take a look at it. Okay, now the next thing I wanted to talk about is the gold market, because we have some real serious problems in the gold market, folks. If you're bullish gold, there's a big problem. First, we'll take a look here at the weekly in the gold and silver index, and then we'll move on to the gold just a little bit later, and also silver. We want to cover those. I know it's not the commodity show, but these markets are breaking so badly that it's really indicative of you know, very, very strong disinflation somewhere in the world, because they just keep going down and down and down, and it doesn't make any difference who wants to buy them or sell them. They still keep going a lot lower. So as you can see, that gold and silver index has you know, had a really good bottoms down here, but it failed to rally very much. And then if we look at the next one we're going to look at here is the bull bear index for the gold, and as you can see, that's very, very near new lows from what we made back in November. So that means there's just virtually no one, you know, bullish the gold. I was bullish, but when we broke that 1190 level, 1195 level in the gold, you just about had to you know, give up the ghost, because you know, that was the 786, and once that cracks, it's going to go down, you know, to at least a double bottom, which would be down around that 1130 level. And you can see that the gold here, after hitting the 61% retracement, just literally couldn't get out of its way. It rallied for 6 days, a total of about $30, $35 an ounce. Which happens to be the harmonic number in the gold. And now we've broken down, and that measures to go below $1,100, and below $1,100 sets up $974 on the long-term weekly chart in gold, folks. This is beginning to look more and more bearish as you look at it. I'm going to show the long-term weekly here. This is very reminiscent of what happened in the crude oil market when we broke down below $90. You know, a barrel, just well, that was way back 8 or 9 months ago. This is the same type of a chart. You can see these lower tops that we've had this past year, all during 2014 and again in 2015, and now we're breaking down near the old Fibonacci level at 1130, and that looks like it's going to fail. And the next number after that takes us down to about 960 to 940 an ounce in gold is what it looks like it's heading for, in my opinion. And it is just, and you know, I love gold and I love silver, and I own gold and silver, but you know, I own gold and silver for much lower prices, and I'm not going to sell it no matter what, because I think that this game that they're playing over there with the Federal Reserve is just going to be, we'll see what will happen. But anyway, okay, let's take a look at the silver market. This is one that's also actually looking a little bit better than the gold market. It actually is holding up above the 786, at least so far, and that comes in around 1520, but you know, we're within a heartbeat of that. So you know, we'll keep an eye on it. But gold is losing to the silver quite a bit. Silver is finishing up here at the 1520 level, which is the 786 retracement of the whole move way back from this level at 1410, which we know how important that was. That was the exact bottom that our good friend Jim Bartolione picked out for us. So we're very, very close here to losing it in both gold and silver. Gold is already broken down. Silver has not done it as of yet, but it's holding on for dear life. It needs to hold $15 an ounce, or it's in really serious trouble, in my opinion, looking at it. Once we broke 1190 in the gold, folks, it really was a very, very bad sign, and that's not the thing that we want to look at. Now, Basil was talking about the U.S. dollar and the UUP and stuff, and how it's going, in a vertical market and stuff. And I wanted to put the dollar. The dollar index is basically the U.S. dollar versus the euro, because that's 53% of the euro contract itself. And if we take this and we look at it on a weekly basis, and we've been talking about this off and on over the past few shows, but as you can see from the long-term weekly chart here, once we broke the 61% retracement that held for 3 weeks at the 110 level, that was really telling us that we're heading down, another 10% down to that 99 level. 98.20 is the exact number, which is the 786. Is it going to stop there? I don't know. All I know is that once they break these key levels, you have a high probability of going to the next level. And that next level in the euro is down another 5% from where we are now. It's already moved 24% this year, and it doesn't look like there's anything going to be holding it back. We have European doing their central bank intervention, whatever in fact that is. In fact, I'm not even sure what that is, but that's what they're telling us, and so we're watching where we are right now. That doesn't mean we can't get a 200 or even 300-point rally in the euro. It's just that the longer-term pattern here on the weekly says that we're going down another 5% minimum, and that's what it looks like. That's what it looks like to me. So keep in mind that that's what the target is on the euro, and we'll see with that. We're going to cover the commodities more in depth tomorrow, of course, but I did want to go over the euro to cover it today to see it. The Swiss franc has gained back almost all of what it lost during the Swiss intervention when they decoupled with the euro. And so that's another indication of what we're looking at. Now, we're going to take a look at the stock market here today, which we do all the time, but this happens to be a key day in Bill Ehrman's estimation of what the market's doing. And if we take a look at what the DAX is doing, let's try that again without the D, what the VIX is doing. You notice the VIX took out the previous day's high by just a couple of pennies up at that one at 16.99. It couldn't even hit 17. We just barely took out yesterday's high, and now we're actually trading almost exactly where we were yesterday on the close. So we're actually down a little bit. Closed at 16.69 yesterday. We're at 16.56 today. So there's very little fear in the market, which I assume it would be. But the market's come down more than 5% recently. So we got to be careful. We got to pay a few bills here. We got the Dow Jones up a little bit, and we got the S&P up just a little bit.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and a little bit of history. Back in the old days, we had, the Dow theory with Richard Russell, and he's still around. He's in his 90s and still does a great newsletter and everything. He's very good at what he does. He's also highly sought after as a speaker. He's out of San Diego area, but his theory was that, the Dow Jones Transportations and Dow Jones Utilities have to go up together. And as you can see, I posted the first chart for the Dow Jones Transportations into the den, and you can see that we've had a pretty big break in the transportations. We've made a low at, I believe, at the 61% retracement today, and it looks like it could be bottoming at that level. The next one we want to take a look at is the Dow Jones Transportations. We already did that. Let's try it again, Larry. And this is the they're also making new lows on the year, both of them, but we'll take a look here now at the Dow Jones Utilities, and you can see that's been in a pretty good downtrend here. We've had a better than 10% correction in that since the high we made back in February. All the indices are lower on the year now, with the exception of the NASDAQ. That's the only one that is still going higher. So we want to keep that in mind. But if we break this low here that we're making today, if this is in fact what you'd like to see, if you're bearish, is you'd like to see this low hold and see a real quiet 3 to 5 day rally, and then that doesn't go much higher than the 382 retracement, then you've got a really good place to to take a look at the short side. It's pretty hard to get short if you're in Europe. We're looking at the DAX index because that thing's up 3% today, with the rest of the world getting whacked pretty hard. So it's still early in the day, but that's what's happened so far. I have a little bit of history here. Back on the days when I was at Drexel, we had a lot of movie stars came in, and one of the favorite people that used to come into the office was Chief Dan George. He was actually is an Indian chief. He was an Indian chief, but he was also an actor. But he was incredibly well schooled in all types of education. That was his main forte, and he was really a smart guy. One of the times when he was on the Johnny Carson show, he was very, very funny. He had an incredible sense of humor, and they were talking about daylight savings times changing just like we just had now. And Chief Dan said, he said, only the white man can cut off the top of the blanket and sew it on the bottom of the blanket and thinks he has a bigger blanket. And I'll tell you, he got a roaring applause for that. That's one of the highlights. If you ever look at some of the highlights of Johnny Carson's great shows, that is one of the better ones. So I think it's a good idea. We have Arizona is one of the few states. Arizona, Alaska, and Hawaii don't change times, so it's interesting when you got to start the day at 6:30 in the morning. You're done at 1 o'clock. Of course, you're never done at 1, but that's usually what's happening. So, well, we'll have to wait and see if this is going to be some type of a major top, but we'll be able to see. And that was the what you get. Oh, someone asked a question here. What celebrity was the most aggressive investor, and who was the wisest? Of the celebrities, one of the guys who was really great is the fellow Wayne Rogers, who was on. Oh my gosh! Come on, guys! Come on! Help me out here, guys! Oh, MASH, yeah, MASH, Mobile Airborne Surgical Unit. Yes, MASH was Wayne Rogers is on CNBC as a regular guest. He has his own hedge fund. He was incredibly good at it. William Shatner was very, very good. He was a very, very astute investor, but probably the biggest and best of all. You probably not even remember this guy. He was a big client of Drexel. His name was Gene Autry. He was the cowboy, the singing cowboy, and he really did a great deal of investing. He and Bob Hope both, they were incredibly good investors. Gene Autry bought most of downtown Los Angeles, and Bob Hope bought the San Fernando Valley. And the San Fernando Valley, grew much faster after Bob Hope died, or was late in his years. But these guys, they had multiple things. Hopalong Cassidy's son, he had a stepson that not many people knew about, but Dr. William Boyd was one of my customers. He was a bond trader till he passed away about 10 years ago, and he was also a very good trader. One of my favorite traders that I had as an actor was Tig Andrews. He was on the Mod Squad, and he was a good friend of Mike Connors, who was on Manic. So these were my fun days. Boy, I used to see these guys all the time, and believe me, it was fun. Lots of stories about that. I got to write about it some days. Anyway, we've got to take a few breaks here to pay a few bills for our fearless leader, Tom O'Brien, and we'll be right back after these words.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to talk a little bit about Apple. A couple weeks ago when it was making the high up at that 133 area, we were looking at the possible shooting star formation, which is one of the most bearish of all candle formations. And in fact, that's what did happen. We've been down now 12 days in a row in Apple. Well, not in a row, but we've been in a downtrend for 12 days. And we're right at the 382 retracement of the last low that we made back at 104 level. The last time we came down from the 104 level, we came down a total of 7 days. And this time we're down Let's rephrase that, Larry. We came down 7 weeks in the last move, and we're down 3 weeks in this move. So we should be reaching some type of support here in Apple in the 123 level. But if it doesn't hold there, we're looking at a potential, and this is a potential for a huge top in Apple. I happened to watch a special on Bloomberg last night on Apple. It showed the new Apple Watch, and it showed the new Apple MacBook, and boy, those are incredible. Those are incredible products, folks, especially if you're really tuned to technical stuff, which in fact I have a really strong difficulty with. But boy, these were incredible products that they had. I think that Apple Watch is a little bit over the edge, but I'm still out about color TVs. No, wait, color TVs I believe are here to stay, but the microwave ovens I'm not sure are here to stay. But this Apple Watch is a little over the top from me looking at it. So we'll see if it catches on. I'm sure it will, but boy, it's got a lot of stuff on it. And that MacBook that they have, that iMac notebook is absolutely phenomenal with 18 hours of battery life, and it also is a great way of doing the programming or whatever it is. I don't know what they do, but boy, it was really incredible just looking at it for $1,300. It was, I don't know anything about the operating system for Apple, but this seems like a really fabulous product. I don't know if it's interchangeable with Windows and other stuff or not. I don't know. Who knows? We'll have to wait and see. Okay. The technical part of Apple appears that we've made a really strong 3-drive pattern on the weekly basis. That's very similar to the pattern that we made back when it was $700 a share and it dropped in half to $385. So this is a market that has got every possible person in the world bullish on this stock, just like it was back in when it was $700 a share. There were 33 people bullish on Apple. Now I believe there are 30 people that are bullish and 3 that are neutral, and those neutral guys are afraid to say sell because they want to keep their jobs, I guess. But whatever it happens to be, but they're very, very bullish. The thing, if you're watching the market for a potential big drop, and I'm not sure it's coming now, I really am not, but it is coming, is watch that VIX index. We need to bust that VIX index above 1,700 and close really strongly, somewhere above 1,750 to 18, and then you've got a really chance for this market coming down. There's a great deal of complacency in the market because of the margin debt being at records. We have a high number of percentage bulls versus bears. Everybody talks about, what the Federal Reserve is going to do. I don't really think it means a whole lot anymore, folks, because the market keeps going up and up and up, and it doesn't seem to have much of a resistance here. But the Fed will eventually someday raise rates. I mean, this has been going on for 32 years, actually 33 years, and we'll see how much longer it can go. But passing out free money like this historically has not been a very good thing. It really isn't. Someone's asked a question about the Australian dollar. I'll be happy to talk to you about that in just 1 second. It only takes me a minute to get it up, I believe. We had some really strong support in the Australian dollar down around the 77 level, but we broke that, and this is a perfect example of what happened with the let's just do this on a longer term because you can see, let's just do it on both. You'll be able to see the Gartly patterns that we had here at the top, and it's a good indication of what's happened in the past. And then we'll also look at it on the weekly basis to take a look at it. There's the daily. You can see we broke down below the lows in January. We're headed lower somewhere around 72 would be my guess. And if we take a look at this on the long-term weekly, that'll verify the 72 level, because you'll see that is exactly the 786, and that'll put us down to the the 618 retracement of the low that we made way back in 2008, and it'll be the 786 retracement of the low made back way back in 2001. Oh, this is even a better chart. Let's just look at this really long-term one. It'll show you where we're pretty much going now this is pretty much what the dollar's doing anyway, but the Australian doesn't have as much influence on the dollar index as the euro, which is 53% of the dollar index. So the Australian dollar is looks pretty good. And remember, a few weeks ago, well, more than that, it's been several months ago, back in November, I was looking at the Australian market because we had a really nice buy pattern in the, let's see how this thing is. There it is. And we'll pull this up here and take a look at it to see what's happened. And you'll see this is the dollar denominated, Australian dollar denominated stock market for ETF shares. And as you can see, we had a pretty big rally, and now we're having a pullback after the big ABCD pattern in the Australian market. And the market rallied up to just about a 61% retracement of the October high. That was after completing the big ABCD move, down into December. I happened to be there in late November. I was in Australia speaking in Melbourne and Sydney, and I was saying you want to be buying this at around 21.50, and it went there, rallied 10%, and it's backed off a little bit from that level, but it trades very nicely. It's a very good trading vehicle for an ETF, but we're coming into major support here where we are now at 22.50, which is at 61% retracement. Now, this is a really high correlation with the Australian dollar. So if the Australian dollar continues down, this market will most likely, continue to go lower. That's pretty much, take a look at it. One of our folks in the Tiger TV family here has asked us a question about China and pegging China to the dollar. Boy, folks, I don't, that's a little bit over my pay grade. I don't understand enough about that to even make a comment. I know that they're moving towards that. I don't know if it'll happen in my lifetime or not. But, Hong Kong is still pegged to the dollar at 7.75. And whether the renminbi, which is the Chinese currency, the yuan, will switch over or not, I don't know. When I first started going to China many years ago, back about 10 years ago, it was 12 renminbi to the dollar. Now it's, I believe it's around 6 renminbi to the dollar. So it's dropped 50% in a matter of 12 years. So the writing's on the wall. It's just a question of how long the wall is going to be, or how high it's going to be. I don't know. These are over my pay grade. It might happen overnight, just like what Switzerland did. That's one of the the risks that you take with foreign currency trading, is there could be a announcement like what happened in Switzerland. Remember what Switzerland did, they've actually regained almost all of that back, folks. Let's just take a look at that Swiss franc just to show you how crazy some of these markets can be, because this thing went down, I believe, 23% in one day, and then in a matter of just a few weeks, oh my gosh, it's almost back. It is. It's parity again. Hold on just a second. This is to show you how crazy it is. Wow, you think something needs to be changed? Boy, somebody made some serious money on this puppy. I hope you guys got the memo before it went out. Okay, we'll take a look at this. This is the Swiss franc. You see, we're within 1.5% of where we were back in January, and that's after the 28% drop that it had going into it. You talk about a rigged market. That's a perfect example of what we're looking at it. Let's just look at it on a long-term weekly, and you'll see that it had some really strong support down there at that 72 level, but it was really quite interesting here. Okay, so that's the Swiss franc of what we're watching. The Japanese yen is doing pretty much the same thing. It's up against this area of 122, which is the long-term 61% retracement that we've had over a period of time. So we want to be able to be sure that we have, keeping an eye on that at 122, because if that closes above 122 in the dollar yen, that's going to be even more strength to the dollar, because that means that the yen is weakening to the dollar, and we will be looking at some real serious moves higher in the U.S. dollar. And the U.S. dollar is going higher, folks, because the euro measures down, to 98, 99. That's at 786, and that doesn't mean that it's going to stay there. So we have a, we have a currency war. That's basically what it is. They're attacking, the U.S. dollar is going higher, and that hurts us because that means all of our products are costing more. And you have to pay, people that come in to buy our products have to pay us in dollars. And so the soybeans and other stuff is high priced. And if we got oversupply, it's not a good thing. We'll have to wait and see. That's my opinion. And I know very little about the fundamentals of this stuff, folks. I know when markets go up because prices are higher and they go down because prices are lower. Other than that, I don't know. I don't know anything. If you remember the old, what was that? Oh gosh, I can't remember the darn thing with Colonel Schultz. Boy, I used to know these. Bob Hogan and Colonel Schultz. Well, Hogan's Heroes. Hogan's Heroes was a very popular series during the 70s, and it was Colonel Schultz would say, "I know nothing, I see nothing, I hear nothing." Yeah, it was Bob Crane in Hogan's Heroes. Yeah, Bob Crane was he was murdered in Indianapolis, Indiana. Many years ago. I was being from Indiana, I followed a little bit, but they never did find out who was the culprit in that. But that's pretty much what had happened with Bob Crane. Okay. One question that we have from one of our listeners is that the theory on Dow theory, was that originated by Richard Russell? Well, the Dow theory came out from Charles Dow. That was way back in 1890-something, or whatever it happened to be. But then Richard Russell, back in the 30s or 40s, I believe, he's been doing it for a very long time, is the one that started to really go into it. And years ago, he was always on Louis Rukeyser. This was before we had CNBC and Bloomberg and all that stuff. Louis Rukeyser was the show that everybody watched on Friday. That was the show you wanted to get on if you were, in the business to, to see this stuff. And so, but then after Louis passed away, of course, we've had CNBC now, and we've had Bloomberg, and, they have all these people. It was, basically what happened. Someone said, well, I don't remember. I was sure that it was Indianapolis, but I could be wrong. Anyway, let's just go on to the question about the Dow theory. Anyway, the Dow theory, we mentioned this before, and I'll mention it again. On March 19th, Apple goes into the Dow. That doesn't mean that it's changing where it's traded. It just means that it's part of the Dow Jones Index, another 30 stocks. They're taking out AT&T, and they're putting in Apple. AT&T, if you don't know this, you should probably know this, that during the 1929 through 1935 period, AT&T went bankrupt twice. And this was when telephones were just coming out. So you can imagine, the havoc that happened. We had automobiles, we had electricity, we had telephones all coming out during the 20s, along with indoor toilets. This was really an incredible time, as Basil has pointed out many times. And I love to hear his thing about the sociology behind these types of things, and we certainly are seeing some of those, but it certainly hasn't happened, not right. Who knows, but we'll see. Anyway, that's it. I guess I was wrong about Bob Crane being killed in Indianapolis. It looks like he was in Scottsdale, Arizona, which I visit all the time there, but I knew he was from Indianapolis. I don't know why I had that Indianapolis connection in there. I might have been living in Indianapolis, but anyway, we don't need to know about that. Okay, we have one other question from another someone that's posted a question for me, and that was about the IBB. The Biotech Index, and I'll put this up here and take a look at it, because that was another one that's been going ballistic. I haven't looked at it in quite some time here, so we'll take a look at it. We've had a little top being made up here, but it's really done very much, and it's strong today. I mean, it's another one that has been doing a lot better than the rest of the market. So give me 1 second here to put this up, and we will be okay, I hope. Just a minute. Just as soon as I said something like that, it didn't work. Okay, there we go. We'll have it ready here in just a second. But the Biotech Index doesn't show any sign of being bearish as of yet. we did have a gap that it came down and filled, and it's acting pretty well today. So we're going to take a little break here. We'll come back and wrap up the show and pay a few bills right now with the Dow still up on the day.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we will talk a little bit about the gold market because we're still continuing to break down. We're trading around 1147. We broke below the 61% retracement at 1194. We've now broken below the 786 retracement, and so looks like we're heading down to break below that 1130 level. Silver still has a chance at $15.20 an ounce, but frankly, I don't think that's going to mean very much. It's trading at 1531 right now, and just a slight movement to the downside will crush it down below $15 an ounce. We're seeing massive deflation in these metals across the board, whether it's iron ore, silver, gold, platinum. They're all under a great deal of pressure, which is not very good from an inflation standpoint, which inflation is supposed to be bad, but the government wants to say that 2% inflation is good. So if that's the case, we have to believe what they tell us, because certainly the government wouldn't tell us anything that isn't correct, I don't believe anyway. We'll have to see what happens. We have a guest tomorrow. Will be Victoria Martin, who's my astrologer, and she'll answer some questions about astrology and how she got into it. She's a frequent, she's on quite a few different shows. She's from Chicago, Illinois, where I first met her 30-some years ago. But then we'll also have on Monday is one you don't want to miss if you're into technical analysis, because we're going to have William Ehrman on. Vermonometry out of Nashville, Tennessee. Bill is probably the best person that I've taught. Well, not probably. He is the best person that I speak to on a frequent basis that has something unique about where market timing is, because he really does the geometric ratios and proportions the way that it should be. And his work goes back many, many years, well over 100 years. And he is so accurate. I mean, he comes within one day, or he literally thinks that, it's going to, be a mistake. And today's a really big day. So whether it turns or not today or not, we'll have to see. But if we close lower tomorrow, we're certainly going to be looking at a sharply lower highs, lower lows in the stock market, especially if the S&P goes below that 2025 level, which is the 61% retracement off of the last move. Remember that the NASDAQ has only made a 382 retracement of that move, whereas we made a 50% in the S&P, we made a 50% in the Dow Jones, but the NASDAQ, who's been the leader of the band, has only made a 382 retracement so much, so we'll have to wait and see. Mr. Ehrman does not predict any crashes, but he is saying that there's a date coming up in April that is like no other date that he's ever seen, and he's going back. I believe Bill is 85, and his work is very, very good. I met him, I think I met him in 07 or 08, and when the crash came in 09, he was spot on with that date, which happened to be a Bradley date. And he was very bearish during the October part of 2007. So he's got some really unusual stuff, and it is quite good. So we want to be able to really try to pick his brains on Monday. And we'll see, what we come up with as far as some of the questions that we'll have. He's very, very good. You got to pay attention to it. And those of you that are interested in technical analysis, I highly recommend that you go to his website, which is www.ermanometry.com. And that's pretty much. Has been pretty bullish. He warned of a potential top up on March 2nd, but now he's saying that this is a real serious bottom. He doesn't think the top comes in until April. He believe, at least I talked to him this morning, he still thinks the top is going to come in April. April the 28th, I believe, is what he's looking at. But we can ask him these questions, on Monday. So live every day in an attitude of gratitude, my friends, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.